Hey guys! So Tesla reported record electric vehicle deliveries for the first quarter, thus largely meeting analyst estimates. However, production fell from the previous quarter as supply chain disruptions and a China plant suspension weighed in. According to the automaker's CEO, this was an exceptionally difficult quarter due to supply chain interruptions and China's zero COVID policy. He shared this through a tweet in which he went ahead to commend the work by Tesla team and key suppliers who came through for the company. So Tesla delivered 310,048 vehicles in the quarter, a slight increase from the previous quarter and up 68% from a year earlier. Wall Street had expected deliveries of 308,836 cars, so yet again the giant EV maker has managed to beat Wall Street estimates. Tesla produced 305,407 vehicles from January to March, down from 305,840 the previous quarter. This is the only downward trajectory recorded for the first quarter, but we all understand that a lot has happened since the beginning of the year, and regardless of all the setbacks, Tesla has managed to hit some impressive figures. Tesla, which is the world's most valuable automaker, has navigated the pandemic and supply chain disruptions better than rivals, and its new Shanghai factory has been driving growth. But a recent spike in COVID-19 cases in China has forced Tesla to temporarily suspend production at the Shanghai factory for several days in March and April as the city locks down to test residents for the disease. So according to Daniel Ives, who is an analyst at Wedbush, the deliveries were better than feared given supply chain issues. In terms of models sold, Tesla said it sold a total of 295,324 Model 3 sedans and Model Y sport utility vehicles, while it delivered 14,724 Model S luxury sedans and Model X premium SUVs. Model 3 and Y deliveries were down slightly sequentially, while Model S and X deliveries were up 25% over the same timeframe last year. The sharp sequential increase in Model S and X deliveries reflects Tesla's ongoing ramp-up of production of these vehicles following an overhaul to their design in early 2021 that required updates to the electric car maker's production line. With the Russian-Ukraine war still continuing, we expect more pressure and constraints on the global economy. Now the big question is, how does this affect EV-making companies, especially Tesla? Well, skyrocketing gas prices spurred by the Ukraine crisis is expected to fuel demand for electric cars, but lack of inventory and higher vehicle prices would weigh on sales. Tesla in March raised prices in China and the United States after Musk said the U.S. electric car maker was facing significant inflationary pressure in raw materials and logistics after Russia's invasion of Ukraine. So given all the headwinds, Tesla's deliveries in the first quarter are very impressive. Gene Munster, the managing partner at venture capital firm Loop Ventures, says that he expects Tesla to continue outperforming other automakers in sales growth. On that note, Toyota, GM, and Hyundai Motors reported lower first-quarter U.S. sales than a year earlier. Musk said in October that Shanghai had surpassed its Fremont, California factory, which is the company's first plant in terms of output. The two factories are critical for Tesla's goal to boost deliveries by 50% this year, as production at its new factories are expected to ramp up slowly in their first year. Tesla started delivering vehicles made at its factory in Grünheide, Germany in March, and deliveries of cars made at its plant in Austin, Texas are to begin in the near future. Now, there are analysts who were expecting Tesla to deliver about 317,000 vehicles during the period. The underperformance likely took some investors by surprise because the sequential growth was the slowest Tesla has seen in years. On one hand, Tesla's first quarter deliveries are an impressive achievement given the global supply chain challenges. On the other hand, however, the fact that they were worse than expectations provides more confirmation to investors that the auto industry is struggling to recover from chip shortages and other parts and logistical issues that have been plaguing it. But it is crucial to note that it's not the position of all investors. There are only a handful who feel disappointed by Tesla's first quarter deliveries. While the quarter's deliveries may have missed some analyst estimates, there's still good reason to expect sequential growth to re-accelerate later this year, particularly in the back half of 2022. The company said in its fourth quarter update that it expected production levels to increase at its existing factories and that it would bring production online at new factories in 2022. Indeed, production has already started at the company's factory in Germany, and Tesla could be just months away from the start of production at its new factory in Texas. But things could get worse before they get better because nothing is really certain at the moment. Tesla's factory in China is currently on a production pause because of COVID-19 restrictions. Furthermore, it takes time to ramp up production at new factories, so any impact from Tesla's factory in Berlin in the second quarter could be very small. Despite supply shortages and a production pause in China, Tesla's full-year guidance for 50% growth this year may be conservative enough for the company to still easily surpass this range, especially if some supply constraints are alleviated in the second half of the year just as production potentially ramps up to meaningful levels at new factories. It's evident that Tesla has scaled its production compared to the same quarter last year as new factories come online. In the first quarter of 2021, Tesla produced just over 180,000 vehicles and delivered nearly 185,000 vehicles. So in terms of production capacity, Tesla won't face any shortcomings. The problem is that constraints will arise from unfortunate global events. Tesla, along with the rest of the auto industry, has also been hurt by widespread parts shortages and inflation. Critical components like semiconductors remain in short supply, and prices have increased for raw materials like nickel and aluminum after Russia launched an invasion of Ukraine in February. In the U.S., Tesla has been leaving customers waiting for months before filling their car orders. But investors shouldn't really be worried about Tesla stock. Tesla said in a regulatory filing that its board of directors had given preliminary approval to a proposal to increase the number of authorized shares of common stock in the form of a stock dividend. This will ultimately require shareholder approval resulting from an amendment to the company's restated Certificate of Incorporation. The company plans to request stockholder approval for the move at Tesla's 2022 annual shareholder meeting. It's important to note that Tesla has not yet provided details regarding the timing of its anticipated stock split or what the ratio for such a split might be. While the date has yet to be announced, the meeting has historically been held in the fall. The company's stock soared after Tesla revealed plans to seek investor approval to increase its number of shares to enable a stock split. Tesla shares have risen about 3% so far this year, while GM and Ford shares have declined. Now, Tesla's stock price shot up 8% on March 28th after the company announced its intentions to pursue a stock split. Nothing is set in stone yet, but many investors are sitting on the edge of their seats trying to figure out their next move. If Tesla's potential stock split is anything like its previous split in August 2020, it could mean a victory for investors. While investors shouldn't buy Tesla stock simply because the company has announced plans for the stock split, there are plenty of other reasons to be bullish on the EV maker. Just recently, Tesla delivered the first EVs from its recently opened Gigafactory outside Berlin, Germany, which significantly increased Tesla's production capabilities. The company is also just days away from the opening of its newest manufacturing facility in Texas. We've already witnessed Tesla's production strength through the first quarter deliveries this year. Given the company's impressive financial performance and the secular tailwind driving the rising demand for EVs, there's plenty of reason to be bullish on Tesla. So what do you think about this? Let us know via the comments section. Don't forget to like, share, and subscribe. Stay safe, and we'll see you next time.